All right, let's jump straight into it. Most traders out there think better chart analysis is going to solve all their problems. They spend hours, days, sometimes even years hunting for that one perfect indicator or the ultimate chart pattern. But honestly, that's not the real issue. The fascinating reality is that a lot of you watching this right now already know exactly where to enter, where to exit, and where to place a stop loss. The real problem is actually following that plan when real money and real emotions are on the line. That's exactly why trading psychology often matters way more than your technical analysis. Think about this for a second. Why do two traders looking at the exact same chart, using the exact same strategy, get completely different results? One is profitable at the end of the day, and the other is just deep in the red. Why? Well, it's because a perfect setup means absolutely nothing if fear makes you exit early, greed makes you overstay your welcome, or anger triggers a massive revenge trading spiral. Ultimately, your personal behavior determines whether the strategy actually works in the real world. And that perfectly captures the core difference we're talking about today. Technical analysis helps you find the setups. It's your map. But your trading psychology, that's what dictates how you execute those setups. You can have the absolute best map in the entire world, but if you panic behind the wheel, you're going to crash. Okay, moving on to our first major concept, the technical analysis myth. Here is a trap that catches literally almost every beginner. Don't get me wrong, charts are amazing tools. They show you trends, breakouts, support, and resistance. But what's absolutely critical to realize is what charts cannot do. No moving average is going to physically stop you from doubling your position size because you got greedy. No indicator can freeze your mouse to stop you from chasing a missed entry. A chart will never, ever force you to respect your stop loss. You are the one clicking the buttons. And that brings us to this crazy yet totally profound truth about human nature. Comfortable losing feels safer than uncomfortable winning. Your brain is literally hardwired to seek out comfort. It builds these deep neural pathways around your habits. So even if those habits are actively losing you money, they feel natural to you because you've done them 1,000 times. So you might not actually lack discipline. Your brain might just be addicted to the familiarity of failure because the rigid discipline it takes to actually win feels super uncomfortable. Which leads us right into the next part. Your brain is the problem. Look, the market isn't out to get you. Your own natural psychological patterns are. Let's talk about one of the absolute worst ones, revenge trading. You take a bad loss, and suddenly all logic is just gone. You feel this intense, overwhelming urge to make it back immediately. So what do? You double your position size, jump into a totally garbage setup, and take another loss. Then you double it again. Before you know it, a tiny $500 paper cut balloons into a $3,000 total disaster in like 90 minutes, all because you lost emotional control. Then you have the exact opposite problem, the give back day. This happens when you are up big. Let's say you've made a couple $1,000 by 11 a.m. You should be thrilled, right? You should just close the laptop and go enjoy your day. But instead, the dopamine hits. You feel totally invincible, so you just keep clicking buttons. By 3 p.m., the market has completely chopped you to pieces, and you end the day red. Doing this actively trains your brain that profits are just temporary. If you look at the breakdown of these cognitive biases, you can see how they mathematically destroy your trading performance. Take loss aversion, for example. It causes you to cut your winning trades way too early just to secure a tiny little profit, but you'll sit there and hold onto your losers forever, hoping they bounce back. Throw in overconfidence after a hot streak or overtrading purely out of boredom, and it's basically a guaranteed recipe for a blown account. All right, let's get into the specifics, the 6 deadly trading sins. These are the emotional landmines that traders step on every single day. Hope, fear, euphoria, greed, FOMO, and ego. Hope blinds you to reality. Fear literally paralyzes you when your stop loss gets hit. Euphoria makes you think you're untouchable after 3 green days, which leads right into greed where you impulsively size up. And FOMO, that fear of missing out, just forces you to chase trades when it's way too late. If you let these 6 emotions drive your decisions, absolutely no technical strategy in the world is going to save you. So how do we fix this? Let's talk about rewiring your trading habits. The good news here is we can completely solve this, but not with sheer willpower. You solve it by building mechanical systems. First, you need clear, fixed trading rules. Second, use a fixed risk amount per trade so one bad call doesn't ruin your week. Third, and this is a massive one, set strict daily loss limits directly with your broker so they lock you out before a revenge spiral can even start. Track your emotions and review your trades every single week. When you track things like hesitation or overtrading, you turn abstract feelings into actual data you can improve on. Which brings us perfectly to tracking progress with TradeZella. Having the right tool here is a total game changer, and TradeZella does all the heavy lifting that most people skip. It uses emotion tagging, so you can literally link your mental state, like being tilted or being confident, directly to your P&L. It gives you a Zella score, which grades how well you actually followed your rules, not just how much money you made. Plus, the trade replay feature lets you rewatch any trade tick by tick. You can literally pinpoint the exact second your emotions hijacked your logic. I absolutely love this mindset from highly successful traders. You have to treat your trading like a literal business. Imagine you had to stand up in front of a board of 10 directors and explain exactly why you took 15 random full-size trades on a Tuesday morning, just because you were bored. Could you justify it? Probably not. Treating this like a business means you need hard data on your behavior, not just your profit and loss. All right, let's wrap this up with the final verdict. Here is the bottom line, guys. Technical analysis finds the door. It spots the opportunity. But your discipline is what actually lets you walk through that door and keep the money. A trader with just an average strategy but bulletproof emotional control is going to consistently run circles around a total chart wizard who loses their mind every time they take a small loss. So if you're ready to stop guessing and start tracking your behavior, your setups, and your mistakes like a true professional, TradeZella is the ultimate tool for the job. You can try TradeZella through my link, and if you act today, you get 20% off all their plans by using the promo code WAR20 at checkout. I want to leave you with one final question to really think about today. Take a hard look at your routine. Are your daily habits actually building a profitable business, or are you just feeding an addiction to familiar failure? Remember, your edge in the market is just a math equation. Your psychology is literally the only thing standing in the way of letting that formula work. Keep that discipline tight, and I'll see you in the next one.